Charlie Munger, The Complete Investor, by Tren Griffin. Picture this. It's 1985, and a major investment bank is desperately trying to sell a company called Scott Fetzer. They've created this gorgeous, thick presentation book, packed with charts, projections, and every bell and whistle imaginable, to prove what an incredible deal it is. They're shopping it everywhere, but here's the thing, nobody's biting. The deal is basically dead in the water. Then Warren Buffett hears about it. He picks up the phone, calls the CEO directly they'd never even met before, and boom, within a week, they've got a deal. Now, because the investment bank had an exclusive agreement, they're still owed a fee of $2.5 million, even though they literally did nothing to make the sale happen. So the lead banker, probably feeling a bit awkward about collecting such a massive check for zero work, graciously offers Buffett and his partner a copy of that fancy book his team spent so much time preparing. Buffett's partner, Charlie Munger, just looks at this banker and says something absolutely legendary. "I'll give you $2.5 million not to read it." I mean, what kind of person says that? Who actively pays millions to avoid information? Well, it's someone who understands one of the most powerful secrets not just in investing, but in life itself. Someone who knows that your biggest battles aren't fought in the marketplace. They're fought inside your own head. That person is Charlie Munger, one of history's most successful investors, and Warren Buffett's brilliantly sharp-witted partner at Berkshire Hathaway. Here's the beautiful thing about this book, Charlie Munger, The Complete Investor. It's not really about picking stocks. Honestly, that's almost the boring part. This is actually a blueprint for how to think better. It's about how an ordinary person can develop an extraordinary mind. Munger loves to say that the best thing one human can do is help another human know more. And that's exactly what we're doing today. By the time we're done, you won't just understand the principles that built one of the world's greatest fortunes. You'll have a completely new lens for looking at problems, making decisions, and you'll have this powerful mental toolkit to help you dodge the common mistakes that trip up most people. You'll discover why being not stupid matters way more than trying to be brilliant, and how that simple shift can change absolutely everything. So who is this Charlie Munger guy, and why should we care what he thinks? He's definitely not your typical billionaire. No collection of Ferraris. No absurdly flashy mansion. By most accounts, he lives a pretty normal life, considering his wealth. His own kids describe him as, quote, "a book with legs sticking out," which is just perfect. He was born and raised in Omaha, Nebraska, same as Warren Buffett, though they wouldn't cross paths for years. He studied math, served as a meteorologist during World War II, and then somehow got into Harvard Law School, without even finishing his undergraduate degree. He went on to help start a prestigious law firm, but the whole time, he was quietly building something far more powerful. A completely unique way of thinking. The core of Munger's entire philosophy? He summed it up once in this beautifully simple way: I observe what works and what doesn't and why. That's literally it. That's the whole secret. Life happens to everyone, right? But Munger, unlike most of us, actually thinks deeply about why things happen and works tirelessly to learn from every single experience, especially other people's failures. He genuinely believes that learning from other people's successes and screw-ups is the fastest, least painful way to get smarter. And the foundation for all his thinking comes from a system he learned from a guy named Ben Graham. Munger believes investing should be simple. Notice I said simple, not easy. There's a huge difference. He tells this great joke about NASA spending a decade and millions of dollars developing a pen that could write in zero gravity. It was an engineering marvel. Meanwhile, he says, the Russians just used a pencil. Ben Graham's value investing system? That's the pencil. It's so simple, Munger says, that professional money managers can't justify their enormous fees by teaching it. The system rests on 4 bedrock principles that Munger insists will never become obsolete. Let's walk through them, because they're the foundation for everything else. The first principle: treat a share of stock as actual ownership of a real business, not some lottery ticket. This sounds obvious, doesn't it? But it's genuinely revolutionary for most people. They see stock tickers wiggling across a screen and get caught up in this game of predicting which way it'll wiggle next. Munger thinks that's completely foolish. It's like trying to predict the mood swings of a massive, irrational crowd from one second to the next. A true Graham investor does the exact opposite. They ignore the screen and look at the actual business. What does this company really sell? Who buys from them? Who's trying to put them out of business? They approach it like they're buying the entire company in a private deal, from the front door to the back warehouse. They focus on just one thing: how much cash can this business generate over its lifetime? If you can't understand the business, you can't value it. And if you can't value it, you have zero business owning it. This leads to Munger's famous 3 baskets for decisions: in, out, and too tough. Most things, for him, land in that too tough basket. He feels absolutely no pressure to have an opinion on every company. If a business requires complex predictions about the future of technology or fashion trends, he doesn't try to be a hero. He just says, pass, and moves on to something simpler. As he puts it, if something is too hard, we move on to something else. What could be simpler than that? This humility, knowing exactly where your knowledge ends, is an actual superpower. Munger compares it to a professional tightrope walker who survived for 20 years. That walker hasn't survived because they're a genius. They've survived because they know precisely what they know and what they don't. They understand that one mistake, one step outside their expertise, and it's game over. The second principle: buy that business at a significant discount to its real value, creating what Graham called a, quote, margin of safety. This is hands down the most important idea in the entire system. If you had to boil down all investing wisdom into 3 words, Graham said it would be margin of safety. What is it exactly? It's a cushion. It's the gap between what a business is actually worth and what you're paying for it. Think about building a bridge. If you know it needs to support 10,000-pound trucks, you don't build it to hold 10,001 pounds. You build it to hold 30,000 pounds. That's your margin of safety. It protects you from bad luck, human error, and a world that's messy and unpredictable. It means even if you mess up your calculations, you can still come out okay, and if you don't mess up, you win even bigger. Your goal, as Munger would say, is to buy $1 for 70 cents, or even less. When you can do that, all kinds of good things start happening. It's an edge that protects you from the one thing that's absolutely guaranteed in investing and life: you will make mistakes. Now here's a weird paradox. A true Graham value investor is actually designed to underperform during a crazy bull market. This confuses people, but by giving up some of that wild upside, the value investor protects themselves from the downside, and over the long haul, across flat or falling markets, they come out way ahead. It's a long game of survival and patience, not a short-term game of chasing thrills. The third principle: make a character Munger calls Mr. Market your servant, not your master. Graham imagined the market not as some wise, all-knowing oracle, but as your manic-depressive business partner. Every single day, Mr. Market shows up at your door. Some days he's euphoric and wildly optimistic, offering to buy your shares at a ridiculously high price. On those days, you might consider selling to him. Other days he's terrified and depressed, offering to sell you his shares for way less than they're worth. On those days, you should happily buy from him. The key insight? You're not obligated to do anything. He's there to serve you, not guide you. The craziness of the market, those emotional, irrational swings of the crowd, aren't a risk to fear. They're actually your fundamental source of opportunity. It's precisely when Mr. Market is most terrified, when prices are crashing and everyone's panicking, that the value investor finds their greatest bargains. As Buffett famously put it, you should be fearful when others are greedy, and greedy when others are fearful. That's easy to say, but it takes incredible courage to actually do when it matters most. The fourth principle is maybe the toughest of all: be rational, objective, and dispassionate. Munger says this isn't just good advice, it's a moral duty. He believes the most important quality for any successful investor isn't some sky-high IQ, but the ability to control raw, irrational emotion and make rational decisions. Someone once asked him what single quality accounted for his enormous success. His answer was one word: I'm rational. But here's the thing, being rational isn't our natural state. Our brains are wired with mental shortcuts called heuristics that helped our ancestors survive on the savannah, but cause complete chaos in the modern world of finance. Munger devoted his life to understanding these psychological traps, which he calls the psychology of human misjudgment. He genuinely believes that if you can learn to recognize and avoid these mental pitfalls, you gain an enormous edge over everyone else. This is where we move beyond simple investing rules into the art of thinking itself. Munger's secret weapon for achieving rationality is something he calls worldly wisdom. He says you can't really know anything if you just memorize isolated facts. Facts need to hang together on what he calls a, quote, latticework of theory. To build this latticework, you need to understand the big ideas from all the major disciplines: psychology, history, mathematics, physics, biology, and so on. He warns against becoming the man with a hammer, to whom every problem looks like a nail. If you only have one mental model, say from economics, you'll torture reality to fit that model. But if you have multiple models, you can actually see the world as it truly is, a complex system of interacting forces. Let's look at an example he gives. A business raises its prices, and yet it sells more products. An economist with only one model is stumped. This violates the law of supply and demand. But someone with worldly wisdom looks through other lenses. From psychology, they might see that the higher price signals better quality to customers. Or, through a different psychological lens, they might discover that the seller is using that extra money to bribe purchasing agents, who then betray their own companies. The world is messy, and a single model just can't capture that messiness. Munger has identified about 25 standard psychological tendencies that cause us to make terrible decisions. We don't have time for all of them, but let's hit a few of the most powerful ones. First, there's the reward and punishment super-response tendency. This is all about incentives. Munger says the iron rule of nature is that you get what you reward for. Want ants? Put sugar on the floor. This seems obvious, but he argues we constantly underestimate its power. Think about a financial advisor earning huge commissions for selling you complex, expensive products. Even genuinely good people can turn into sharks when their incentives are misaligned, often without even realizing it. Upton Sinclair nailed it. It's very hard to get a man to believe something when his way of making a living requires him to believe the opposite. Then there's social proof tendency, our deep urge to follow the herd. We assume that if lots of people are doing something, it must be right. This is what fuels financial bubbles. Everyone sees their neighbors getting rich on some crazy new investment, and the fear of missing out becomes unbearable. They pile in, not because they've done research, but because everyone else is doing it. Munger points to when one oil company bought a fertilizer company, and then like lemmings, every other oil company rushed out and bought one too. Total disaster. Thinking independently is a trained response, and it's absolutely essential. One of the most dangerous is deprival superreaction tendency, better known as loss aversion. Psychologists have found we feel the pain of a loss about 2 to 2.5 times more intensely than the pleasure of an equivalent gain. This completely twists our decision-making. It makes investors sell winning stocks too early to lock in a small gain, while holding losing stocks way too long, desperately hoping they'll just get back to even. It's why gamblers at the racetrack start betting on wild long shots at the end of the day. They're desperate to erase their earlier losses. And then there's envy. Munger calls envy a really stupid sin, because it's the only one you could never possibly have any fun at. All pain, no fun. He's heard Warren Buffett say many times, it's not greed that drives the world, but envy. Worrying that someone else is getting richer faster than you is a recipe for disaster. It pushes you to take risks you shouldn't, chase things you don't understand, and abandon a sound, patient strategy. Someone will always be getting richer faster than you. Munger says that's not a tragedy. So if we're all wired with these faulty mental circuits, how does anyone actually succeed? This brings us to the next part of Munger's framework: cultivating the right stuff. These are personal attributes that, through discipline and practice, can override our worst psychological instincts. First and foremost is patience. Success, Munger says, means being incredibly patient, but aggressive when it's time. He uses a baseball analogy. In investing, there are no called strikes. You don't have to swing at every pitch. You can wait and wait and wait for that perfect fat pitch right down the middle. And when it comes, you don't just tap at it. You bet big. Opportunities are rare, and you have to be ready when they appear. Most of the time, the right move is doing nothing. This is incredibly hard for most people, who feel this compulsion to always be active. But as Buffett says, the stock market is a device for transferring money from the active to the patient. Next is discipline. You need discipline to stick to your circle of competence, to resist the temptation of things you don't understand. You need discipline to avoid acting just because you can't stand sitting still. Munger and Buffett both insist on having large blocks of time every day just to sit and think. They read and think way more and do way less than most people in business. You also need to be calm, but courageous and decisive. Munger says if you're not willing to watch your portfolio drop 50% 2 or 3 times a century with complete calm, you're not fit to be a common shareholder. You need the courage to buy when everyone else is panicking and selling, and the decisiveness to act aggressively when a rare opportunity shows up. In the first quarter of 2009, when the financial world seemed to be ending, Munger took all the excess cash from a company he ran and poured it into bank stocks. It was a once-in-40-year opportunity, he said, and he didn't hesitate. You need to be honest. Munger believes honesty isn't just good morals. It's the best policy. A reputation for integrity is your most valuable asset. When people trust you, business becomes incredibly efficient. He says Berkshire has made extra money out of morality because people trust them to behave well. He has a simple rule. There should be a huge gap between what you can legally do and what you should ethically do. You should never even come close to that line. And finally, you need a sound temperament. More than brains, more than a high IQ, you need to keep raw, irrational emotion under control. Munger says lots of people with high IQs are terrible investors because they have terrible temperaments. They get overconfident, impatient. They let envy cloud their judgment. Success in this game is far more about character than intellect. Once you've got the 4 principles, the mental toolkit of worldly wisdom, and the character traits of the right stuff, you can start playing the game. But even here, there are variations. Munger's style has evolved over the years, and this is where he parts ways with the classic, old-school Ben Graham approach. Graham, shaped by the Great Depression, was famous for buying what he called cigar-butt stocks. These were beaten-down, ugly companies, trading for less than they'd be worth if you shut them down and sold them for parts. The idea was that even a soggy, discarded cigar butt has one last puff left in it, and if you can get it for free, that puff is pure profit. Munger, however, realized the world had changed. Those obvious bargains were getting harder to find. And more importantly, you can't build a massive enterprise like Berkshire Hathaway by buying tiny, dying businesses. He famously pushed Buffett in a new direction with this simple, powerful idea. It's far better to buy a wonderful business at a fair price than a fair business at a wonderful price. This was huge. Instead of just obsessing over price, Munger started focusing on the quality of the business itself. He realized some businesses were so good they were actually worth paying a premium for. The big money, he discovered, wasn't in the last puff of a cigar butt. It was made by owning high-quality businesses for a very long time. This brings us to one of Munger's most important concepts, the moat. He views a great business as a castle, and the value of that castle is determined by the strength of its protective moat. The moat is the durable competitive advantage that keeps competitors at bay. A manager's duty, in his view, is beautifully simple. Every single day, their job is to widen that moat. What creates a moat? It can be a few things. It can be a brand. Think about See's Candies, the first high-quality business they bought. For people on the West Coast, giving a box of See's is a sign of affection, tied to happy memories. A competitor can't just show up with a massive checkbook and replicate that feeling overnight. Buffett says if you gave him $30 billion to knock off Coca-Cola, he couldn't do it. That's a moat. It can be economies of scale. This is when a business's costs drop as it gets bigger. Walmart's massive distribution system gives it a huge cost advantage over a small-town shop. A railroad has a moat because no one's going to build another transcontinental line right next to it. Or it can be network effects, where a product becomes more valuable as more people use it. Think about American Express. The more stores that accept the card, the more valuable it is for cardholders. The more cardholders there are, the more valuable it is for stores. It's this beautiful, self-reinforcing loop. Munger believes finding a business with a wide, sustainable moat is the holy grail. He'd rather have a business so good that an idiot could run it, because eventually, one will. Of course, he prefers a great business run by a great manager, but if he has to choose one, he'll bet on business momentum every time. So what does this all mean for you? You're not trying to build the next Berkshire Hathaway. You're just trying to make smart decisions for your future. Munger's advice is remarkably consistent. If you're not going to do the serious work to become an active investor, and honestly, most people shouldn't, he has a simple prescription: buy a no-load, low-cost index fund. He calls this the approach for the know-nothing investor, and there's zero shame in it. Acknowledging your limitations is actually a sign of wisdom. By simply buying the market and holding on, you'll outperform most investment professionals, especially after accounting for their fees. But if you do want to play the game seriously, you have to really commit. You have to become what Munger calls a learning machine. You have to go to bed every night a little wiser than when you woke up. It requires voracious reading, cultivating genuine curiosity, and a passionate interest in why things happen. You must build your own latticework of mental models. You must learn to recognize the psychological traps that fool everyone else. You must define the borders of your own circle of competence and have the discipline to never, ever step outside them. And above all, you must have the patience to do nothing most of the time, and the courage to act decisively when a truly great opportunity presents itself. It's a simple set of ideas, Munger says, and the reason they haven't spread faster is precisely because they're too simple. The world wants complexity. It wants secret formulas and fancy algorithms. But the real secret is just common sense, taken incredibly seriously. It's a lifelong journey of trying to be consistently not stupid, instead of trying to be super intelligent. And as Charlie Munger has proven, that simple path can lead to a truly extraordinary life. When you step back and look at Charlie Munger's life and ideas, what you find is something way more profound than just an investing strategy. You find a genuine philosophy for living a better, more rational, and more fulfilling life. The most powerful lesson for me isn't about moats or margins of safety. It's about humility. It's about having the courage to say, I don't know. In a world that rewards loud, confident opinions, even when they're completely wrong, Munger teaches us that the greatest strength is knowing exactly where your knowledge ends. His too hard pile isn't weakness. It's the very source of his power. It keeps him out of trouble and lets him focus all his energy on the few areas where he has a genuine advantage. Think about how you can apply this idea today, not just with money, but in your decisions, relationships, and career. Where are you pretending to know more than you actually do? Where are you playing a game you can't win just because of pride or peer pressure? What could you put in your own too hard pile, freeing up your mind to focus on what truly matters? The second key takeaway is this relentless focus on psychology. Munger understood, long before it became fashionable, that our brains are often our own worst enemies. We're wired to follow the herd, to fear losses more than we value gains, to see patterns that aren't there, and to let envy drive us to foolish decisions. His catalog of human misjudgment is basically a user's manual for the human mind. Simply being aware of these biases is the first step toward overcoming them. Here's a simple action you can take. Next time you feel strong emotion about a decision, whether it's fear of missing out on something everyone's talking about, or stubborn refusal to admit a mistake, just pause. Ask yourself, which of Munger's tendencies might be at play here? Is it social proof? Loss aversion? That simple act of self-awareness can be the circuit breaker that stops you from making a terrible mistake. Finally, there's this idea of becoming a learning machine. Munger's life is a testament to the power of continuous, multidisciplinary learning. He reads history, biography, science, everything. He knows that answers to complex problems are rarely found in one neat little box. They're found by connecting big ideas from many different fields. This is what builds true wisdom. So here's your final challenge. Don't just learn about your own field. Deliberately read something from a completely different discipline. If you love science, read a great work of history. If you love literature, dive into psychology or economics. Start building your own latticework of mental models. It won't just make you a better thinker and decision maker. As Munger promises, it'll make life way more fun. That was a deep dive into Charlie Munger, The Complete Investor by Tren Griffin. We've explored the core principles that guided one of the world's greatest minds. But I need to be honest with you. A summary can only ever be a map. The real treasure is found when you explore the territory yourself. The book is packed with stories, examples, and a depth of wisdom we simply couldn't cover today. This summary is designed to help you decide if this journey is one you want to take. If Munger's way of thinking has sparked something in you, if you feel that pull to become a clearer, more rational thinker, then I genuinely encourage you to pick up a copy. Reading it isn't just about gaining knowledge. It's about fundamentally rewiring how you see the world. A link to the book is in the description below. Also, if you found this summary valuable and want to keep exploring the ideas that have shaped the world's most successful people, please take a moment to like this video and subscribe to the channel. It lets us know we're on the right track and makes sure you won't miss our next journey into another life-changing book. Let's keep growing together.